3, 2, 1. Welcome to the show.
Welcome to the show. All right.
Back again.
July 31st. It's the end of the month.
Tomorrow is August. I swear. I don't know. I feel like this is what old people say all the time. And I'm not trying to offend old people because there is one. But it's like you think like the weather and then like how time's flying.
Yeah.
I'm like, man, it was like the other day we were doing Memorial Day. And I'm like, no, it's going to be Labor Day.
Right.
It's like crazy.
Labor Day's coming.
Yeah. So what? Good week in the market. Like, there's a lot of things to be happy about.
Yeah. If you were in the market, it was a huge week. Last couple of weeks.
I'm in the market. Are you in the market?
I'm in the market.
I think you are.
Yeah.
Hopefully, all of our members are following us in the market.
Yeah. The Facebook group is pretty interesting right now. And
the public one or the members?
Both.
Oh,
both. Yeah. If you're a subscriber, this weekend's newsletter is really good. I already wrote it, and we're looking at the 3 Fed decisions. A lot of people are talking about the last 2 Fed announcements in May and June. The market popped on announcement day and then rolled over really bad the next day, like really bad, and that didn't happen this time. And so why didn't it happen?
Did you get your crystal ball out and look at it?
No, I got my chart out and looked at it. The setup is completely different.
Right.
This time going into the Fed announcement than it was the last 2 times. So,
are we going to look at in the show, or is that just in the newsletter? You only
newsletter.
Get that in the newsletter?
I only get that newsletter.
Well, you got to subscribe. You get it.
There's a couple other things in the newsletter that are good. So,
all right, let's
anyway,
jump into it, man.
You want to sign up? All right. Weekly update show, 31 July 2022. So we had a question earlier in the week. I did most of this, put this together early in the week, and it feels like forever ago. But we had a question in the members-only Facebook group, and it was about. I'm going to get to it. I'm going to read it, but that's what the basis of this whole thing is about. So we have access to the mutual fund window now. How would you select funds? So we're going to look at some of that. We're going to look at the top 5 funds, do some analysis of those top 5 funds, and then what would it look like if you were actually going to buy one? And then we'll take a look at the TSP fund charts. Got to keep my girl up here again because this is a crazy week on the market, and people are either really happy or really, really pissed off. There was nothing intuitive. If you had your crystal ball out and you were watching the mainstream media, there was absolutely no reason why you would think the market would go higher this week. But it did by a lot. So keep meditating if you're stuck. Okay. So here's the question from the members only group. I would like to suggest a topic for an upcoming show. Now that the mutual fund window has become available in TSP, we now have access to inverse mutual funds for the first time. Yes, so an inverse fund is if the S&P goes up, for example, 1%, the inverse goes down 1%. Or if you had an ultra inverse, if the S&P went up 1%, the ultra inverse would go down 2%. So, and the reverse is true, right? If the market's going down, S&P goes down 1%, and you have an ultra inverse, that fund goes up 2%. So you can use the mutual fund window in that way. In the past, during a market downturn, our only option was to retreat to the G or F funds and ride out the storm, with the stock market prognosticators saying we are heading into recession and long-term bear market in the near future. Can we explore the use of these inverse mutual funds and a possible mitigation strategy for a portion of our TSP account? It's a portion, yes, because we can only contribute a maximum of 25% of the value of our TSP account into the mutual fund window. If we are, in fact, headed into a recession or an upcoming bear market cycle, I think it would make an excellent topic for the show. Interested in your thoughts? Okay. Recession, it's the joke of the week. Have you been following it all? So a recession, right? The technical definition of a recession, I want to see since like World War II, when they came up with this thing. The definition of a recession is 2 consecutive quarters of negative GDP. Okay.
Right.
So gross domestic product, when it's increasing, it means the GDP of the country is growing, right? When it's negative, the country is shrinking. The economy is shrinking. Okay. 2 consecutive quarters is the definition of the label that they say is recession. Okay. We had negative 1.6 in the first quarter, and negative 0.9 in the second quarter was the final.
Mm-hmm.
That's 2 consecutive quarters of negative GDP growth.
Right. But nobody's willing to say recession.
Well, nobody in the administration is willing to say.
Of course.
It is an unbelievably political, like they just refuse to say it, right? And it's, for me, it doesn't matter what you call it. I mean, that's been the funniest thing for the last couple of weeks.
You can call it what you want.
You call it whatever you want, right?
But we're in it.
It is what's happening, right?
Yeah.
It doesn't matter what label you put on it, because nothing happens when, if all of a sudden somebody comes out and declares, there's an agency whose job it is, I can't remember the acronym right now, but there's an agency whose job it is to declare that the country is in recession. And the day before that, the country was in recession. I mean, it doesn't matter, right? It's just saying that now I put the label on it, right? It's unbelievable, but it really freaks people out. Like, oh my God, now we're in recession, and yesterday we weren't. Like, it doesn't
work that way.
No, it's unbelievable. But if you're watching the news at all, it's pretty funny. If you flip back and forth between Fox and CNN, it's hysterical because they talk about the same things at the same time.
Yeah.
And if 180 degrees out, I
know. I stopped watching
funny.
Most of them.
It just cracks me up. Okay. And of course, if you're JC Peretz, who we talk about all the time, so he says if we are in fact heading into a recession or an upcoming bear market cycle, JC's been doing jumping jacks about, if you don't think we're in a bear market, like what do you think we're in? The vast majority of the market topped out in February, or was it November? Whenever the S fund topped out, mm-hmm. In 2021, and it's been declining ever since. So like that's another label. When we're 20%. When the S&P 500 is down 20%, it's in a bear market. If it's down 19%, it's not in a bear market, right? So we just had this recovery for the last couple of weeks, right? And I think we're down now like 13%. We recovered almost, at the end of this week, we've recovered almost 40% from the low in June. And so does that mean we're not in a bear market anymore?
Right.
Like, it's stupid. Anyway. All right. So, before I get on to fund selection, actually, there's something I forgot. So, seeing as how we are kind of in a bull market for the past couple of weeks, and we'll see if we stay there.
Bringing out the bull.
My dad got me a Father's Day present when I was at home in Boston.
So bow on it too?
I think it came with it. It's like some kind of a when they actually do bullfighting. It's
on the camera here.
So we need a bear. This thing's got like somebody already put the swords in the bullfighting.
It's got holes in it.
It's got holes in it.
So tell them where this thing's been.
Yeah, it's kind of a scary story actually. But yeah, so we got to get a bear that goes along with the bull. All right. So fund selection. So if we were gonna take a look at in the mutual fund window, what would we do? Okay. So you go to your mutual fund window account, you go to the fund screener, and you screen by performance. Okay. Hopefully my pen works. All right, you hit the year-to-date. Basically, we're here on fund list and performance, right? So I didn't check any of the other filters. I just wanted to filter for performance, and then you have to hit year-to-date return so that it knows that that's actually the column that you want to get. And eventually you fiddle with it for a little bit because it's not a great software stack, and you get the list of best performing funds for the year. Okay. So once you get that, these are the fund names. Then you hit the overview, right? So this is the performance tab. You got to go to the overview tab, which gives you the ticker symbols, right? Because we have to have the ticker symbol, or else we can't look things up, right? So so we got the 10, or however many of these are on this list, 10 funds. Now we get the ticker symbol. And we can see that ultra short NASDAQ, ultra short small caps, a future strategy, another future strategy, and then a pro funds ultra sector. So out of the top, so that's 5, and then we get another ultra bear, which is short, ultra short, ultra short. So you can see out of the top 10, the vast majority are inverse ETFs, right, or ultra inverse. Okay, which makes sense because the market has been generally going down. So when we did it, this is year-to-date performance. You'd expect that the inverse funds would do the best because inverse funds go up when the market goes down. So what I wanted to do, kind of losing track of my notes here, but what I wanted to do was rather than, well, we're going to take a look at the first 5. Okay, so we get the ticker symbol, and we're going to take a look at the first 5 charts. So the first one is Pro Funds, Ultra Short NASDAQ, USPIX. Okay. So here is the 1-year chart of the USPIX. So if it's year to date, right? So we're starting down here at the bottom. So it had a big run up, a big move back down, another big run up, another ABC back down through that 20-day moving average line. But this is the number 1 performing fund in that list. So some things to consider kind of in general, right? Trading fees are $28 a trade. So you don't want to be day trading your mutual fund, right? So if you kind of think about that with respect to this chart, if you buy this fund and you want to hold it, this is a problem. If you're only holding it for a couple of months and then you got to sell it, if you miss that day, you're collapsing, right? You're coming down. You've lost almost all the gains that you made for the first 4 months. Now it comes right back up. You have this big move down here. It's very volatile, is what I'm saying. So if you're trying to minimize the number of trades you have, because each trade costs $28, you kind of don't want a fund that looks like that. Like the TSP funds, you get the day's closing price, right? There's no noon rule. So you can trade these things right at the end of the day if you want. But you're going to get that day's closing price. And that's why a daily chart is a line. That's why this is a line chart instead of a candlestick chart, because there is no intraday movement. You're only getting that day's closing price. So again, specifically for USPIX, it's an ultra short of the NASDAQ. It's extremely volatile. Huge price swings would probably keep me out of this fund, but that's the number 1 performing fund. Okay. UCPIX was number 2, kind of similar, right? I mean, you can connect the bottoms, and if you're willing to accept these ups and downs and maybe sell it if it gets below that downtrend line, like that's an option. If you're okay with the $28 fee, you can, draw the channel and buy it down here, sell it up here, buy it down here. You can play those games, but you have to be good at trading it, and it's very volatile. So again, I'm not sure I would go with that one either. QMHIX. This one is a lot more stable, right? This one is much more something that I would consider buying. Once we got above the 10-day moving average line, or 20-day moving average line, we got support all the way along, broke through a little bit here. We got a lower high and then a breakdown through that 20-day moving average line. So if I had bought it back here, when it broke out at the beginning of the year and held it for 6 months, almost 7 months. Would I sell it here? Yeah, probably. I certainly wouldn't be buying it there. MFTNX, same kind of thing. It's definitely, it tracks that 20-day moving average line really well. And so that's what I would be looking at if I was going to buy one of these funds. Obviously you want ones that perform well, but you want ones that you can apply technical analysis to. And kind of like the last one, this one, we got a high, came down, break below that 20-day moving average line, tried to get some support, tried to get back above it, and then broke down below it. So I certainly wouldn't be buying it there. Then the fifth one, so this is number 5 on the list. It's the other ones were inverses, right, which made sense. This one is actually a bullish fund. It's energy, right? And we know that energy is one of the only industry groups that has actually done really well in 2022. So if you had seen the breakout in 2022, again, it follows follows that 20-day line pretty well. Got a little bit of churning here, so might have gotten bumped out there. And then came crashing down last month, right? This one is interesting because it flattens out here at the 30 line, oversold. As price continued down, it didn't get more oversold. So it's an indication. It's a divergence of sorts. It's not great divergence, but it's anticipating a bottom. So we get a bottom down here, and if you had a longer chart, you'd see these bottoms actually connect like that, going back several years like that. So it hit a long-term downtrend, found support there, and then broke back up and got above its 20-day moving average line. Okay. So again, it's an ultra bullish oil and gas fund. If you think that energy is in a long-term bull market, this would be a great time, right, to get into this fund. The chart looks much different than any of the other ones. This is the time to be selling this, right? This is the time to be buying this. Hopefully you guys can see the difference there. So, okay. So that oil and gas fund chart, okay, if you wanted to buy it, what would you do? You would start off with a long-term view of it, right? So this is a chart back to 1999 when the fund began. Each tick is 1 month. And the reason now we got each tick is a month in price movement, but we use it comes up as candlesticks because even though you can only get closing day prices on a monthly or a weekly basis, you can get candlesticks from the price movement in between because it's not just the daily close. So a couple things to point out here. You can kind of see it definitely tracks, in this case, 20-month moving average, right? Once it breaks down through it, you definitely want to be out of it because it crashes pretty hard. But it follows along pretty well. The patterns come out really well. You get an ABC. You have a triangle consolidation, which is great because 9 times out of 10, it breaks out to the upside from there, which it did. And we had a gap down, and then it basically collapsed through that 20-month moving average line. So on a long-term chart, this one is something that I could trade. I could trade this. Most recently, we got a double bottom down here. We got a double bottom down here, a breakout, a little bit of consolidation above that 20-month moving average line, and then an explosive move higher. Okay, so and then we had a big drop off, right? Because we had a big drop off in energy last month, but it picked up that trend line, right there. So that's the long-term view. What you would go to next is a weekly view. So here's 5-year weekly chart, right? Again, it's also candlestick because there are 5 days worth of data in each of those candlesticks. So it tracks that 20-day to 20-week, in this case, 20-week moving average line pretty well, right? Once it really collapsed down through it, that was kind of the end of it. So it comes down, gets just below that 50 line, but like in all these other, it just barely gets below there and finds support and moves higher like it did in the last couple of weeks, right? So then you move into the daily, and that's why it's a line chart, because it's closing the daily closing price. So it pretty much tracks right on its 20-day moving average line. You don't get to see the big volatility because it's a line chart from closing days. But if we connect this trend line, it's a little bit off, but you can see it pretty much found support at that, I'll say long-term trend line. It's 2 years, year and a half, something like that. We got oversold down here as price was continuing to come down. Again, got support at that trend line, bounced back up, and got above its 20-day moving average line. So at the end of the day, I actually decided to buy this fund. I think, barring this big move down that we just had, I think we're in a long-term bull market in energy. And I don't want to trade in the mutual fund window. I want to put it, because I don't want to pay the $28 each, in and out. So I want to be in a fund that I think is going to be moving up for the long run. Okay. And I want to get in it at a good time, which I think is right here. So I decided to buy the fund, and this is what I did. I go in, I'm in the mutual fund window, right? I just done all my research. I'm in the mutual fund window. I check the fund I want to buy, hit buy. This is the screen that comes up. It's a little bit confusing. It asks you, if you want to do all these other things, which I don't really understand. I just made my selection. And that's the one that I selected right there. So I hit next. And it asks you how much you want to put in. And I told it I wanted to put in $10,000. I checked the box that says I read the prospectus. It says you're getting ready to put $10,000 in there. I said, okay, you told me that before. I hit confirm. It says, okay, it's pending. And it says, congratulations, you bought at the next closing price $10,000 worth of that fund. And then it says, go back to account preview. I hit that, and now I'm back there. And so it's confusing. When you buy it, it acknowledges that you're buying it. But this 5.56% was from the day before. So you don't actually own it when you buy it, because you're going to get it. You're going to get that day's closing price.
Day,
yeah. So it will look confusing when you do it. I don't have...
Now tell me they're not doing something confusing on this website.
Oh, I don't even want to talk about it.
Do you hear the sarcasm
website.
there?
Oh, my God. It's the website. Yeah.
Sorry.
Yeah, I go in and check it every day to make sure my money's still there. The horror stories are unbelievable.
I know. I shouldn't have mentioned that. Sorry.
All right.
So that's a pretty simple process, though.
Yeah.
Once you've funded your mutual fund account,
yep.
Right? So there's a process to that, and we've talked about it.
You fund it, you pay the $150 annual fee.
You do all that.
Yep.
Now I've got X amount sitting in my mutual fund window,
right.
My account. And from there, I can decide what funds are out of what funds are available, right. How much I want to buy, right. And all that. And that seemed pretty straightforward. So, I would say, yep. But you did your research before you decided to buy, obviously, right? Which is where all the work comes in.
Right. So what I did, I didn't do a great job of explaining it here, but what I did basically, I go to the mutual fund window, I sort by performance.
Mm-hmm.
I want to see year-to-date performance, and the question went to how do we use the inverse funds. It's the answer is the same whether you use the inverse funds or a bullish fund. It's just that in this case, I decided I wanted to go with the bullish fund because I think energy in general is going to go higher from here, and the inverse funds tend to be much more volatile.
Yeah,
I don't,
They're good. They're great for what they are, but they are more volatile.
If we could trade them every day
right.
without paying the fee, I'd be all over it.
Yeah, that's always the kicker.
Yeah.
It's not that why wouldn't you do it? Well, because I'm going to get dinged in fees, and then there's going to reduce my return.
Right.
And they're volatile enough that I know I'm going to have to go in and out. And so in that case, that's not a good decision. And so, I think this is where a lot of folks, though, like they hear us talk about this, and I can imagine they're like glazing over, like, I kind of understand what you're talking about, but I don't. Well, this is why financial advisors exist, right? So that is some of the hesitation that they had with giving us access to this kind of stuff, because it can be quote unquote dangerous, if you don't know what you're doing. I mean, and that's why we do what we do, is we're trying to educate people. We're not trying to give you advice. We're not trying to tell you to go buy this thing that Jerry just did.
Right. Absolutely not.
What Jerry did was take the knowledge that he's learned to be able to kind of filter down, knowing his risk tolerance, knowing his personal circumstances, and he says, okay, I want to invest in this thing for these reasons. Right. And that's just an educated decision. And all of you guys that are watching the show, whether you're members or not, you can get educated and you can make the decisions he made. I think the decision points that you just kind of described are not that difficult if you spend some time. Now, sure, you've got decades of experience kind of filtering these things, right? Right. But the underlying fundamentals of how you came to that decision are not that difficult. No, it's just education, right? And so now,
flip to the screen for 1 second. So we talked about this on one of the shows before. All these are links, right? They're all blue. They're all links. Mm-hmm. If you click that link, it takes you to a blank page. Okay.
That sucks.
They haven't built the back end of these things yet.
Yeah,
right?
I think you told them about that, right? Like you called
I did.
in.
Yeah.
Yeah. So you have to go find that info yourself, instead of normally, hopefully when that's fixed, you'll be able to click on that link and it takes you to all the.
It'll take you to something like Morningstar.
Yeah. Right.
And that'll give you a lot of good information. Yeah. And there will be a little chart in there.
But you'll need more.
If you're a technical analyst, you'll go to TradingView or stock charts or whatever you use and plug in the ticker symbol, and you'll do your analysis of it and decide whether or not you want to buy it.
Right.
That's the technical analysis way to do it. Most people don't do that, right? They go to Morningstar. If it's got 5 stars, they'll buy it, right? Or if it's got dividends if they want, or whatever.
And all you did was sort, right? When you described it earlier, you sorted in performance, right? And so that just gave you the starting window of like you're going to look at the first 10 and say, all right, now I'm going to start kind of whittling through this. I'm not going to look at the other 4,700 and whatever. Right. I'm going to look but that's the way you decided to kind of filter that first. Right.
Well, the only thing I care about is performance.
Exactly.
Right. Now you can filter it all kinds of ways.
Right. And where I was going is that's kind of why they created this. Like if you wanted to look for things that you were interested in investing in for whatever reason, right? You can look for that.
You can filter that way.
Yeah. We're only concerned if it's going to make money. We don't really care about all the other reasons that.
Yeah, I'm pretty sure the fund that I bought, that Ultra Sector Oil and Gas fund, didn't get a very high ESG rating.
Probably not.
I think they were yelling at me for buying that fund, to be honest, because they want you in ESG.
Oil and gas, probably not.
Anyway, okay. So hopefully that gave you guys, no one else is going to take screenshots of their personal account and show you how to do it. I can tell you that.
Yeah, I was going to say, I haven't seen any tutorials out there.
No.
and if they are, they're definitely not going through like that. Like I wish they would, hopefully they'll put that kind of stuff together. But yeah, again, first of all, nobody lets you look over your shoulder and tell you exactly what we're doing with our own money. But
yeah. Okay.
The fun charts.
All right. So, TSP fun charts. So we are a little bit before the close on Friday. So when I put these charts together, it was about 2:00. So the market closed actually higher than where these, when it's yellow, you know that the day hasn't closed yet. So the market closed a little bit higher actually than that. So we've been talking for months and months about once the price closes above that 20-week moving average line, we got support all the way along until January, broke down, and then ever since then couldn't get back above it, right? Now we're back above it. What does that mean? All it means is until it got back above it, there was no possibility that it could have an extended rally, right? It has to be the first thing it's going to do is get back above that line, before it has a chance of continuing to move higher. Okay. So now that it's above that line, if you're looking at it on a weekly basis, could you get in here? Sure, you could get in. The odds of it, I won't say odds, but now that it's above that line, it's certainly stronger, right? It's in a stronger position. We're just about above that 50 line. It's definitely what you want to see on a weekly basis. Okay, so I'm not advocating that anybody jump into it right now. One thing you could do is wait for it to come up, come back down, and test that line. And if it gets support there and breaks out, then buy it. That would give you a really, really strong indication that price is going to continue higher. But for right now, could we be about to have something like this? Yeah, it's possible. But that's on a weekly basis. S fund close, right? It's at 45.21 on the RSI, so it's not above 50 yet. Could it hit resistance there at that 20-week moving average line, just like it did here? Yep, it's possible. Same as it did here. It's not above it. When it gets above it, then it's possible to continue higher. Until it does get above that line, it's not a possibility. I fund, same kind of thing. We had 2 huge weeks in the I fund. We're still not back above the 50 line. We're still below the 20-week moving average line. I know there's a lot of FOMO out there, so everybody wants to get back in. And all I can point out is when it gets back above there, that 50 RSI line, you want it to stay there. We don't really have any examples. I guess we could say right here. We broke below it and then back above it, but we got a lower high. So I guess what I'm trying to say is just because we're, on the C fund back above this line doesn't mean that the coast is clear and we're going to new all-time highs. But it's the first step. F fund. We've been talking about the F fund for a few weeks. Nobody thought this was going to happen. The Fed raised rates. When the Fed raises rates, prices are supposed to go down, because price of bonds work inversely to yield. So by raising the rate, it means raising the yield. The price is supposed to go down. This is the market telling the Fed it doesn't believe it. It doesn't believe what the Fed is doing. It gets much more complicated than that, and I'm not gonna go into it. But the F fund at this point is obviously clearly above its 20-week moving average line, and if you wanted to draw this trend line, you could do it, and as long as it continues up along that trend line, and if it broke below it, you could sell it. There's all kinds of possibilities there, but certainly, however high it goes, when it comes back down and retests that 20-week moving average line, you want to see support there. Then it moves higher. Lots to talk about in the newsletter this weekend. It's going to be a good one, I'm just saying. So that is about all I got.
Questions?
I don't have any questions.
Do you have any questions?
No.
I don't have any questions. But if you have any questions, listener, viewer, feel free to put them in wherever you find this video, in the comments section. If you don't find a comment section where you find the video on YouTube, Facebook, or whatever, then just shoot us an email. support@growmytsp.com. We'll do our best to answer. Yep. Yeah. Hopefully you like the info. If you did, share it with your friends. If you didn't like it, don't share it.
Share it with your friends.
Share it with your friends.
Hopefully that answered the question. Whoever asked the question, let us know in the comments if that answered it.
Yeah, that helped.
It's the fees. The mutual fund. I wanted to be complaining about what they gave us in the mutual fund in the window, right? I wanted to complain that it wasn't ETFs and they didn't do anything with the noon rule and they like the important stuff, right?
Yeah.
They couldn't get the easy stuff right.
I know. So they couldn't have fixed the other stuff.
Yeah.
Yeah. But, there's options. And I'm all for, giving us more options.
Yeah. More options are good.
Yeah. And what we hope, in the future is that we'll be able to educate people enough on how to maximize their TSP, but then after we get enough people kind of in that camp, I think then it's the next level. Like, what can I do other than TSP? Because there's a lot of things you can do outside of the TSP, but we can't go there yet.
No.
Like, we're not ready for that. We're gonna be here talking about the TSP, right, for a while. But just know that we do think about other options. We just want to keep it kind of simple, and until everybody understands how to manage their TSP, there's no point in talking about all that other stuff.
No, because all the other stuff is going to be managed the same way.
Exactly. Yeah. All right, guys. Hope you enjoyed the show, and we will see you next time.
Out of here.
Music cue.